Welcome to Markets Now. I'm Michelle Rook with DuWayne Bosse with Bolt Marketing. Mixed trade in both grain and livestock futures this morning. Soybeans, let's start off there, DuWayne. We started off a little bit higher on some export business, and now we're starting to fade. So talk a little bit about why.
Yeah, well, I think we're fading because of forecasted rains for Brazil. Further down, it's always the extended forecast has had the heavy rains, right? Well, they went from the extended forecast to kind of the mid-range forecast now, and it's the middle of next week, and they're supposed to get some better soaking rain. So I think that's going to keep a lid on the market, and also maybe a sense of the holiday trade coming a little bit. Nobody wants a new position over the next 2 weeks. I'm afraid a lot of the large traders, this might be their last trading day for the year. You never know. That doesn't mean that the market will just go to bed the next 2 weeks, but it could slow it down today at least.
Yeah, no doubt. And 21.5 million bushels of export sales this morning, which is great. But when you look at the weekly totals, we're still behind, aren't we?
Well, we are. When you put it on the chart, you'll notice, yeah, we're running behind a little bit, and that's a little depressing. But like you said, the big sales this morning, China was in there buying, and then the bigger purchase was unknown, which we're going to hope and assume that's China as well. And, it kind of goes back to the whole weather thing in Brazil. It's like, I try to be a weatherman and try to predict what it's going to do down there, but it's really, what does China think? If they're nervous and want to get some purchases on the books here, then it'll matter for the market. And next week, if that forecast, flips hot and dry again with light volume, we may still see some fireworks next week.
Yeah, and it's interesting to see what happens when you have thin trade and light volume. You can move a market a little farther than you anticipate, right?
Well, yeah, exactly. That's kind of what I'm getting at. Is it seemed like yesterday morning and today, what we've seen so far is starting to get into the holiday trade where we've got news on both sides, but it's not enough to move the market, and people are just squaring up positions. Maybe funds have been doing that for a couple months here, but next week, if the traders aren't there and not watching it, if you get a midday model run that has, a high pressure ridge coming back into Brazil after some rains next week, well, market might get fired up, and the guys who are there might push it enough to run through some resistance levels that would trigger the buy stops up above, and all of a sudden beans could be up 35 for no reason. So yeah, it could be a very quiet trade, but it could be some fireworks too. So I really sound like a broker there talking both ways.
Yeah, you kind of got to keep on your toes and make sure you're not falling asleep during these holiday times. One more soybean question, and then I'll move on to corn. Soybean meal, March below the $400 mark, and I think we're below support on the nearby contract as well. How much of a concern is that, since meal has been kind of the leader as far as pushing this soybean rally?
It's a big concern for me because just what you mentioned, it really is what drove the raw soybean prices higher. Argentina basically running out of supplies because their crop last year was half of a crop. I mean, it was that bad of a drought. I just feel like this pullback is maybe a little premature too. Now, Argentina weather has been pretty good, a little, maybe too much rain in the east, a little dry in the west. But I think we pulled back here on soybean meal because we're just assuming, well, they're going to have at least an average crop and they'll be back out selling soybean meal. And remember, the new Argentina president, we thought he was going to lower export tax. He didn't. So I think it's a little premature. I think we should find support in meal here very soon.
Yeah, I should point out on the Argentina story, though, it sounds like somewhere down the road they're going to probably pull back those export taxes. But like you said, just didn't happen here immediately like we thought it was going to happen. Corn market. Wow, really tight range yesterday. Are we just going to bobble on both sides of steady here for a while in that holiday trading mode you just talked about?
I'm afraid of it for a few reasons. One, we don't have the bullish story. Now, I will argue that this Brazil drought could end up being more of a corn story than soybean story, but that might be down the road when we find out, they don't plant all the second crop acres. But yeah, corn just grinds sideways. And one of the biggest reasons we can't rally a lot is if we do rally, we're going to have a lot of farmers selling. And I know I keep coming on and saying that same thing, but I keep hearing it in between our segments of how much farmer selling is left out there. They're undersold. It sounds like they sold the soybeans for cash and they're going to sell the corn on a rally. But will that rally come? Maybe the market has to drop 50 cents and farmers are sell, but I sure don't want that to happen.
Yeah. And corn, as we speak right now, it looks like we're drifting just a little bit here, but only a half cent lower. So like I said, pretty quiet there. Wheat market, unfortunately, we could have a lower weekly close there, at least in HRW wheat this week, right?
Yeah, you're right, and I'm a little bummed about that. We rallied on the China buying our wheat, right? That we had daily sales announcements, and then there was a news article that came out that said, we shouldn't have rallied the market this far because China made those purchases months ago, air quotes, and it was at lower prices, so now we're overpriced. Well, those daily sales announcements are supposed to be released 24 to 48 hours after the purchase, so I really don't think that was the deal. I mean, maybe there's some red tape involved in it or something, but anyway, Michelle, the US dollar has also trended sharply lower since we had some good economic data this week. So I'm hoping China comes right back in and buys some more of our wheat next week. But you always got to continue to feed that bull to get it to rally, right?
Yeah, no doubt. And we should talk about the dollar here because the pullback would be favorable for exports overall. The other thing to watch is money flow, because are we going to have money in commodities, or is it all going to go over to the equity sector now that it's hitting some new highs?
Well, it probably stays in the equity sector when it's doing what it's doing right now. All-time highs, everything looks great. We're talking about now maybe interest rate cuts the next year, maybe 3 cuts. But it's funny you mentioned that. Index funds, the long-only index funds, if you look at a chart, they started to exit long positions when interest rates started to rise. So I kind of wonder if they might start to buy commodities again as interest rates start to decline, or at least a forecasted decline. So I am looking for that, but they're different than the managed funds that are more the day-to-day traders. Those index funds just go long if they think it's a good buy long-term and just stay long.
Yeah, or in the case of last year, they did it as a hedge against inflation. And so it'll be interesting to see what they do going forward.
Yeah.
Cattle market, we started off lower. We're trying to come back here. It feels more like buying on the dips versus selling on the rallies here. So is the mentality changing a little bit in this cattle market, DuWayne?
What a great question. Yeah, it's flip-flopping back and forth. And now as we're talking, we're going red a little bit again on the livestock. So it's just what I've noticed, I guess, is the feeder market ran up to the 20-day moving average, and it's struggling to get above that. So maybe a little bit like that holiday trade I mentioned for the grains. Nobody wants to push a new position above resistance into a holiday week. But also, we're not crashing like we have before. Michelle, there was 2 other times in this long downward trend where we went sideways and recovered for about 5 to 7 days. Well, we're on about day 7 here now, and the market's not crashing. So that's a good thing. So maybe the funds are done liquidating, and they're going to stick with these 25,000 long contracts they've still got. But I can't also sit here and tell you that the market has to go higher either.
Yeah, in the cattle market, looks like we could have a higher weekly close, though, DuWayne. So at least technically, that would be a nice pivot, wouldn't it?
It really would. I was leaning towards the short side here last couple days, thinking here comes that big crash again, because I'm mad at myself because I didn't sell it in those 2 other times we did the sideways and then a big crash. But you're right. If we can somehow close the day and we don't see that crash, I don't really want to be short the market then either. And sorry, that's just what traders do. We flip-flop our ideas pretty quickly. But you're right. I mean, that'll look much better on the chart. The only thing is, it's not like we can say now, well, we're so far below the cash market, because actually the cash market's come down and kind of met up with the futures market. And on the feeder side of things, actually, the futures market is above the cash index right now. So we don't have that fundamental story of saying it has to go higher right now, at least right now anyway. So maybe sideways is good for cattle. I don't know.
Yeah, and we've had sloppy cash this week, and cash was really what helped lead this rally initially. So I guess I'm impressed that we're holding together with that in mind. Hog market, big update yesterday, back down today. So just a little profit taking, you think?
Yeah, probably. That hog market is just crazy. But, this week we had better U.S. economic data, right? So I think, buyers thought that we'll get through this pork production, this surplus we have. And also China's market stabilized a little bit too. I think that's where the big rally came from yesterday. But I don't have anything bullish to say fundamentally that we have to start an upward trend in hogs either.
No, but the dollar lower, I think yesterday seemed to push us as well, since we're so export dependent in pork, right?
Yeah, absolutely. It sure did. And we still are exporting pork is nice, but boy, our beef exports have really struggled. We always got to remember Brazil's prices didn't rally like ours did the last couple of years.
True. All right. Thanks for joining us, DuWayne Bosse with Bolt Marketing. That is Markets Now.